You know, for years, it feels like all we've heard about Boeing is bad news, a company deep in crisis. But then, something surprising happened in the first quarter of 2026, a little piece of data that has everyone asking one huge question, and we're going to dive into it right now.
So yeah, that's the big one we're going to tackle in this explainer. After all the negative headlines, the production nightmares, the staggering financial losses, is this finally it? Are we actually seeing the real beginning of a genuine turnaround for the American aviation giant?
Okay, so this is what got everybody talking. In the first quarter of 2026, Boeing delivered 143 airplanes, beating out their arch-rival Airbus. And you got to understand, deliveries are what Wall Street really cares about, right? Because that's when a plane on the order list turns into actual cold hard cash. So this is the first real piece of evidence that maybe, just maybe, this comeback story has legs.
All right, so let's dig into that number a bit. Just how big of a deal is this win, really? I mean, look at this timeline. What's just staggering is how long it's been. Think about it. Q1 2019, that was before the 737 MAX grounding, before the pandemic, before the whole door plug mess. The years in between were just brutal for Boeing. So look, one good quarter doesn't just magically erase all that history, but it is a clear break from a very, very long downward spiral.
And you know what? This isn't just dumb luck. There's a real plan behind this, driven by a new guy at the top who's trying to completely overhaul how Boeing actually builds its planes.
And that brings us to this guy, Kelly Ortberg. He took over as CEO in August 2024. And here's the key part. He didn't come from the finance side of the house. He came up through the nitty-gritty of manufacturing. His whole job, his entire mandate, was to fix the company's broken production culture from the inside out.
And he didn't waste any time. He took some really big, concrete actions. First up, he brought Spirit AeroSystems, the company that makes the fuselages for the 737, back into Boeing. That reverses a decision from like 2 decades ago. Second, he's piling on the training. We're talking over 550 extra hours for the workers on the 737 line. And third, he's put in more quality checks inside the factory before parts even move from one team to the next. So you see the theme here, right? It's all about getting back to basics. It's an operations-first, nuts-and-bolts kind of strategy.
And bringing Spirit back in-house, it's not just about getting quality right. There's some serious money involved. I mean, just look at this number. Analysts at places like Jefferies and Bank of America think that by cutting out the duplicated work and just making the supply chain smoother, this one move could save Boeing something like $1.5 billion a year.
Okay, so the plan sounds good, right? And it seems to be working. But hold on. Before we start popping champagne corks, we have to talk about the massive, massive challenges that are still dragging this company down. This is the big reality check.
And let's start with a number that's just staggering. Since the whole 737 MAX crisis kicked off, Boeing has burned through over $34 billion. That is just an incredibly deep hole to climb out of, and it really shows you how financially fragile the company still is. And honestly, the problems are kind of everywhere you look. First off, even with that delivery win, they're still not making money. Then you've got the FAA, which has put a hard cap on how many 737s they can even build. Meanwhile, their big defense programs are just bleeding cash, their fancy new 777X flagship is delayed again, and yeah, you better believe regulators are watching their every single move.
This table really breaks down the, let's call them, problem children. So for the MAX, they're stuck at 38 planes a month, period. Not one more until the FAA says so. The KC-46 tanker? Yeah, that just cost them another $500 million hit. Ouch. And the 777X, which was supposed to be flying passengers back in 2020, well, now they're just hoping for 2026. Every single one of these is a huge drag on the bottom line.
So, with all that bad news, you're probably sitting there thinking, why is anyone optimistic at all? Well, here's why. It's because if, and it's a big if they can actually get through all this, the reward on the other side is absolutely enormous.
And to get why that reward is so big, we got to talk about this term, free cash flow. Or FCF. Okay, forget about profit for just a second. Free cash flow is the actual cash a company has left over after it's paid all the bills and reinvested in the business. It's kind of like the ultimate health check for a company. And for Boeing right now, it is everything.
So why does it matter so much? Well, if they can get that FCF positive again, it unlocks 3 huge things for them. 1, they can finally fix their credit rating, which is hovering just one step above junk status.
2, they can start paying dividends to their investors again, something they haven't done since 2020. And 3, and this one is probably the most important, they can finally start funding the R&D for the next generation of planes they need to actually compete with Airbus down the road.
And how do they get there? Well, this right here is the clearest path. It all comes down to the 737 MAX. So right now, like we said, they're stuck at 38 a month. But the goal is to get the FAA's blessing to slowly ramp up, first to 42, then 47, and the big prize is 53 a month. And get this, every time they increase that monthly number by just 5 planes, it adds something like 3.3 times billion dollars to their annual revenue. This ramp up, it is the single biggest lever they have to pull to get that cash flowing again. So what we have here is this incredible story, right? On one side, you've got real, tangible progress on the factory floor. But on the other, you have these huge financial and regulatory storms still swirling around them. So what's the verdict? Where does that leave us?
Yeah, this slide really lays out the two sides of the coin perfectly. In the hope column, you've got that Q1 delivery win, Ortberg's fixes that seem to be working, the Spirit deal, which should cut down on defects, and the 787 Dreamliner, which is actually a really strong profit maker. But then you look at the fear column, they're still not profitable, production is capped, old problem programs like that KC-46 tanker are still losing money, and let's not forget, Airbus is still way out ahead in overall market share. The tricky part is, both of these columns are 100% true right now at the same time.
And that really brings us to this quote from a SWOT analysis that just came out, which I think just nails it. It says, "The turnaround is directionally right and still fragile." That's it right there. For the first time in a long time, they're finally pointed in the right direction. But the whole thing is so fragile that one more big screw-up, one more major quality escape, and it could send them right back to square one.
So clearly this story is a long way from being over, and the very next big test is coming up quick. It's our earnings call on April 22nd. That's when we're going to get the next clue. Can they turn this little bit of momentum from Q1 into a full-blown profitable year? So the question for everyone watching, investors, airlines, all of us, is pretty simple. Is this fragile momentum finally going to hold?